Now, keeping on the topic of credit, Michael, I'm sure that you have a lot of people who come to you because they've pulled their credit report, they've been looking at their information, they've already hit hard times, and their credit isn't so great. What are some things that you advise people to do to start improving their credit since it is so important?
Well, and that is one of the most popular things where people contact us, and that is you've made some mistakes with your credit. We've had hard times, medical problems, unemployment, reduction in overtime. All these things can affect our ability to repay our bills and negatively affect our credit reports. First thing you have to do is try to get all your accounts paid as agreed. That's the most important step. Next thing you want to do is get a copy of your credit report, see where you're at with it, sit down with a credit counselor, and have them really give you step-by-step instructions on how to do it. Basically, though, one of the things you can do is to open up a secured credit card, preferably, one that reports unsecured. That's a great option for either starting credit from scratch or rebuilding damaged credit. If you call and talk to one of our counselors, we can give you the names of some of the banks that offer reasonably priced secured credit cards. Another choice would be most banks have what they call a credit builder program, where you can go and talk to the personal banker and actually get a loan from the bank to buy a savings account, in essence. So they'll give you $2,000, put it in a savings account for you. You'll pay it with a loan. You make the loan payments. They'll hold the savings account until the loan is paid off. Then at the end of the 12 months, 24 months, you get the savings account. You have a little bit of money now, plus you've rebuilt your credit. So those are a couple really good steps to start to rebuild credit. Or start credit from scratch.
Okay, great. And once again, if you'd like to contact Family Credit Management about your credit report or anything else having to do with your finances, here's their information. There's the services they provide. And we do have Michael McAuliffe from Family Credit Management tonight on our show with us answering our questions. So if you have a question, this is a great opportunity for you. You can ask anonymously whatever question you have about your money, about your personal finances. Go ahead and give us a call. Michael would be happy to answer your questions. Now, switching gears, Michael, today the governor's office warned consumers. They issued a warning telling people not to get a refund anticipation loan. Now, I'm sure there's a lot of people out there who don't even know what that is. So can you explain to us what that is and why it's dangerous?
Sure. What they were just talking about is yes, they're called refund anticipation loans. And that is when you go to fill out your tax return, they give you they say, you know what, we can give you your money in 2 or 3 days and for a fee. Of course, the fee is going to be quite a large fee. Actually, it turns out to be an average, I think they were saying 220 to 320% if you did it on an annual percentage rate. Very expensive way to borrow money. We don't encourage it. Just start getting all your tax preparation documents together now. Get your W-2 forms. So as soon as your W-2s come, you can go ahead and get your tax refund filed. On your tax return, you can give them your checking account number. You can give them your routing number. They can automatically deposit the money back in your checking account. That's the way to do it. Those are the steps to take. Not doing these loans, they're expensive. You're not getting the money that much early. You're talking about an average of a couple weeks, and you're paying a high amount to do it, and it's an expensive way to borrow money, and not something we suggest.
Okay, so you wind up paying money, and you could have gotten all of your money just days or a couple weeks later anyways, put right into your banking account.
Just file quickly. File your stuff quickly. Start getting all your documents together now so you're all set. When you get your W-2 in the mail, and they should be coming here in the next couple weeks, just file right away
Tax time is coming.
Yeah, just file right away then.
Well, great information, great information. And we do have a caller on the line ready to go. Welcome to the show. What's your question?
Thank you. My name is Lorraine. I was considering getting married, and my credit is excellent. However, my husband's credit is messed up very, very bad. So I was wondering if that would affect me in any type of way.
Yeah, that's a good question. We do hear that a lot too. No, his credit is not going to, bleed into your credit at all. At least it shouldn't. You do want to monitor your credit report to make sure that doesn't happen. One of the biggest downfalls to that is if you go to apply for a loan together, the lenders will always take the lowest of the two scores.
Very good.
So that's the only part, it's a problem. But as long as you won't have any problems at all as far as your credit report going down because of his.
Thanks so much, Mike. I do appreciate that.
Okay, you're welcome.
You all have a good evening.
Thank
you
you.
too.
You too.
Great question.
Bye-bye.
I will add, one thing onto that is we do see, a lot of problem with joint accounts. And I always really warn people about the dangers of joint accounts, whether or not it's a joint checking account. We have a second chance checking account class. We see a lot of people come to us because they had a joint checking account and it hurt them. How did it hurt them? Well, it can be you walk away from the relationship. They mismanage a checking account 6 months, a year, 2 years later. You go to open an account and you realize that you're in Check Systems, which is a credit reporting agency for managing your checking account. And now you can't get an account because of it. So if you've got any checking accounts out there that you signed up for, you did a joint account and you're not with that person, you walked away from it and they're still using it, you need to get that account closed. Because if they mismanage it, they can come after you for any amount that's owed to the bank. And worse yet, it can be reported in the Check Systems, and this can keep you from being able to get a credit, get a bank account in the future. And like I said, for loans, they will take. So if you have two people and one spouse has a lower credit score, so say one's at the average of 723 and one's at 650, one's in subprime, one's in prime, they're going to take the lowest one to decide the interest rate, the down payment requirements. So that is one of the problems with it.
So that's kind of like a double-edged sword, Michael, because on one hand, they could take the lower credit score out of the couple, but on the other hand, if both people aren't on the loan, then they won't have the same amount.
You won't have both incomes. Yeah, you won't have both incomes to go towards it. So I'd also suggest doing everything you can to start to rebuild, your spouses. We see this, really quite frequently.
Sounds like a great motivation to try to improve your credit so that you and your spouse can go about getting loans and things like that effectively. That was a great question. And if you have any other questions like these during the week when our show is not on, you can go ahead and give one of our certified credit counselors a call. They'd be happy to talk to you about a topic like this or any other topics that you may need to discuss with them, and they're certified and very friendly, and they'd be happy to talk to you. And right now we're taking your calls, and we have Michael McAuliffe with Family Credit Management on our show with us answering your questions.